Let's start in South Africa, where yet another strike is on, this time in the aviation sector. About 1,000 workers at the national carrier, South African Airways, are picketing for a wage hike. Now, flights were disrupted as members of the South African Transport and Allied Workers Union, SATAU, vowed to stay out of work until their demands have been met.
Small in number, but making themselves heard. A walkout by about 1,000 technical workers at several airports, the latest sector to ride the wave of wage disputes now beginning to sweep the country.
Management of SAA must begin with themselves. If they want to rationalize the workers' increases, they must rationalize their executive salaries and bonuses. SAA must be held accountable. And at this point in time, we do know that the workers of SAA Technical have performed very well.
Only minor delays so far, say airport authorities, to international and domestic flights. Airlines say they have backup plans in place, though for the country's national carrier there's not much margin for error if this drags on. SAA has recently been propped up by a government bailout. 30,000 car factory workers are now in their second week of walkouts. A resolution there, though, may be close. Then there's the textile industry, which looks set to join them, as do thousands of construction workers after their salary talks broke down too. Major disruption appears to be brewing.
It might cost the economy about $100 million a day, which over a week would knock about 0.1% off GDP growth. All the eyes of international financial investors are focused on emerging markets, and so to some extent the strikes on this occasion are likely to attract more international attention.
And that's before we get to the mining sector. Gold industry employers have been given a week to consider pay rise demands of up to 60%. And in the platinum belt, imminent mass layoffs are bound to cause further problems too. After last year's labour woes, a tough wage negotiation season had been widely expected. And this is the beginning of the emergence of that more militant labour environment, one that could start to prove rather costly for Africa's largest economy. Guy Henderson, CCTV at OR Tambo International Airport in Johannesburg.
Let's take it to a completely different operating environment. Egypt's government has shortened the nighttime curfew imposed to restore security in the wake of recent violence. But even as the crisis and turmoil of the last couple of weeks fades, shop owners are still feeling the effects on their businesses. As CCTV's Yasser Kim now explains.
Ala Mohammed owns a shop that sells mobiles and gifts in downtown Cairo. By day, business is normal and sales are fine, despite recent political instability.
More people come to buy during the day because they know they'll not be able to come in the evening. Many tell me they cannot buy in the morning because they're at work, so I send the goods to their homes.
Ala says that in spite of the slowdown, sales of mobile phones and food products have held up. The street now looks busy, full of people and cars. In the evening, however, the situation changes completely. By nightfall, most Egyptians have gone home to abide by the curfew. This has depressed Cairo's bustling nightlife and the revenue of many businesses, hotels and restaurants. Some shops, however, remain open.
We are lucky that the military leaves us to work during the curfew, but we only serve the buildings around us. We are not allowed out of the street.
Like all shop owners, Ala says the curfew has sharply affected sales. Also affected are workers whose shops had to close early.
Many of us work night shifts because our shops close at 2 or 3 in the morning. Now we're not working because of the curfew, and obviously we're not getting paid.
Ironically, all the ones we spoke to don't mind the curfew, although they have lost income because of it.
I don't mind it. The curfew will help retain security, which is good for us in the long term.
We should not be selfish. The country's welfare is more important than us individuals. We love our country and the curfew is for its benefit.
The curfew has compounded more than 2 years of economic pain for Egypt. But with the easing of the curfew, residents now hope this signals a return to normal and hopefully also to the path of economic recovery. Yasser Hakim, CCTV, Cairo.
Now, still in Egypt, Egypt's Sharm el-Sheikh resort usually has a steady stream of visitors drawn there by the sun, the sea, the sand, the sights and so on. But that popular Red Sea resort has seen quite a drop in the number of visitors as other countries warn their citizens against travelling to Egypt. CCTV's Clementine Logan has more.
Egypt's Sharm el-Sheikh airport is usually bustling at this time of year. Tourists come from all over the world to soak up the sun on its sandy beaches. But this summer their numbers have dropped due to the ongoing political crisis. When the army-backed government took over after the ousting of Mohamed Morsi, it hoped to repair the business environment and attract investment by improving security and pumping in new funds. But the latest violence, the worst Egypt's seen in decades, looks likely to stall these plans for some months. If it continues, the tourism sector, which accounts for about 7% of GDP, could be damaged further. Egyptians working in tourism say they're struggling to drum up business. European travel agents are again suspending trips, and the United States has also warned its citizens against travelling to Egypt.
The season this year has been in between. The start was good and the end has been bad. Security as a whole in a country in the world affects tourism because it relies on security, and that's it.
However, some are optimistic that Sharm el-Sheikh can weather the crisis.
Thank God it didn't have a big impact, and God willing it will improve. Sharm el-Sheikh gets colder, but it never dies. Thank God.
The number of visitors fell in the wake of the 2011 revolution from around 14 million to just over 9 million. This figure rose slightly to a little over 11 million in 2012. But with Germany, Sweden and Belgium issuing travel warnings just last week, it remains to be seen if Egypt's vital tourism sector can scramble back on its feet. Clementine Logan, CCTV.
Let's go live now to the Egyptian capital of Cairo, where CCTV's Yasser Kim is standing by with the latest details on Egypt's economic health as a whole. Yasser, we have seen, of course, off your package the kind of trouble that SMEs in Egypt are going through as a result of the curfew. But what effect is the curfew having on larger businesses, the formal sector in Egypt?
Well, they've been suffering hard, and just today they issued this, what they call Save the Industry call for the government. They're calling on the government and the banks to help them to pay the loans and installments. They are indebted. They cannot. They don't have any income. A lot of their export contracts, for example, have been cancelled. Many of them have been cancelled for two reasons: either political, European countries that are taking a political stand against Egypt and they're trying to cut off business with the Egyptian companies, or the actual stages of production that have halted for security reasons, for the curfew. Most of the companies now or the plants are working with one shift. So how can they produce enough to cover the contracts they've signed before the curfew started? A lot of problems concerning supply because of security reasons, so the companies are not able to supply their products around. There's a lot of problems for the bigger plants and companies, and there's a suffering, and they're calling for the government and banks to help them out.
Indeed. Let's zero in, however, on one specific sector: hospitality and tourism. They seem to be hit disproportionately by the combination of lower income from the visitors coming into the country and the curfew as a whole. What's the short-term outlook for that sector in Egypt?
I'll go back to the package you just showed now, the story on Sharm el-Sheikh. Let's talk about the different hotels and in this sector and industry. You've got Sharm el-Sheikh and Hurghada and Sinai. They're doing well at this point. First, because the curfew has been cancelled. It didn't even start in this area. It's considered the safest, and there's no curfews there. So what's happened is that most of the Egyptians living here who can afford to go to Sharm el-Sheikh and Hurghada have gone there. So the hotels now are working about 80% during the past week. And this is expected for another 10 days. That's when, in September, Egyptians have to go back to work. We're now in the summer holidays. So they're doing well at this point. but from the Egyptians moving there. The problem is less money. They spend less than foreigners coming, and they don't spend with hard currency. That's what the industry needs from foreigners. But at least they're covering some vacancies that happen due to the foreigners not coming at this point. The ones who are suffering are the ones in Luxor, the ones in Cairo. They're suffering badly, except maybe a few hotels around the airport, where all the cabin crews from the airports and airlines, they've put them there around the hotel because they cannot move during the curfew. So the hotels around the airport are doing very well, full of cabin crews there, really nice people. And if you go there, you're going to enjoy it at this point. But otherwise, downtown, all the areas of Cairo, Alexandria, Luxor are doing very bad in the tourism side.
Indeed. Finally, about a fortnight ago, there was a proposal to convert the $5 billion or so that estimated, I should point out, $5.4 or so billion that Egypt owes to foreign oil companies into bonds. Now, that proposal was being evaluated by the central bank and the Egyptian General Petroleum Corporation. Has there been any progress whatsoever on that idea?
They said we had two contradicting sources coming out from the Ministry of Petroleum, but the latest, which I consider the more accurate, was the Minister of Petroleum himself saying this is cancelled or has not been even discussed with the petroleum companies. In his last meeting with the foreign companies last week, he said it has not been discussed. So obviously it seems that the petroleum companies don't want to go into this line. Before that, he said that the government was discussing details, payment facilities, the dates, which international auditor will be running this whole show. But at this point, the latest coming up is that they're discussing other issues now. The minister did not say what is the next step, but he said at least those bonds are not on the table with the foreign companies.
Indeed. Thank you very much for that update. That's CCTV's Yasser Kim live in the Egyptian capital of Cairo. Now let's move on to East Africa. The Nairobi Securities Exchange is looking to China for lessons on growing its small and medium enterprise segment. Kenya's President Uhuru Muigai Kenyatta praised the progress made by the Shenzhen Stock Exchange. That's China's second largest bourse. It has over 1,500 companies listed after less than 25 years of operations. President Kenyatta, who visited China last week, said Kenya is committed to involving SMEs in its quest to strengthen Nairobi's capacity to meet the demand from Eastern and Central Africa for financial services. Earlier in the month, the Nairobi Securities Exchange signed a memorandum of understanding with China's biggest bourse, that's the Shanghai Stock Exchange, for collaboration in areas like human resource training, tech and product development, mutual sharing of information, and undertaking joint research projects as well. Right, now let's take you back to South Africa. Of course, keeping tabs on one of our biggest stories over the last couple of weeks, South Africa's continuing labour problems. Strike season is in full swing. Let's get the latest details from CCTV's Angelo Coppola. He's live with the latest details on the labour dispute in Africa's largest economy. Angelo, thank you so much for your time this evening. SAA's operations, give us the latest details on how they've been affected by Sitawa's strike.
Well, at the moment, all we're seeing is that OR Tambo International, the biggest airport in South Africa, is slightly affected. What's happened, though, is that SAA had contingency plans in place and they've brought on staff. Now, the unions are suggesting that perhaps those staff that SAA did bring on are uncertified. Obviously, SAA refutes this allegation, but the bottom line is that there's been little disruption to air traffic into and out of that international airport. Besides the fact that our rugby team was delayed on a runway for about an hour this morning at about the start of the strike, there hasn't been that much delay. What we don't know yet is whether there's been huge impacts on the other airports, but of course, people flying into OR Tambo might experience small delays, but nothing untoward at the moment, Raman.
Indeed. Now, Sitawa, of course, despite losses of about 1.3 or so billion rand for the year ending March 2013, they argue that SAA, in their view, still has the cash flow necessary to support a 12% wage hike. What data are they using to support that argument?
I'm going to suggest that perhaps it's some wishful thinking. We do know that SAA has a history of getting government bailouts. One analyst suggested to me that the bailouts over the last 20 years have been between 12 and 16 billion rand over a long period of time. So perhaps the union is thinking that maybe the government will bail them out so that 12% hike that they're looking for can be funded by a bailout. But there actually is no evidence. Let's also bear in mind that South African Airways, in terms of its efficiencies, is probably one of the least efficient airlines in the world. They reckon around 400 people per plane ratio, and that's a huge number. So we'll have to wait and see, but at the moment I think it's wishful thinking on the part of the union.
Indeed, we'll have to leave it there for the time being. Thank you very much for that update. That's CCTV's Angelo Coppola live in Johannesburg, South Africa, with the latest details on what's going on with the labour dispute down south. Now, we're taking a short break here on BizAfrica. Here's what's coming up next. Zimbabwe's President Robert Gabriel Mugabe has repeated his threat of tit-for-tat retaliation against foreign companies. We'll have reactions coming up in 5. Welcome back. The 20th Assembly of the United Nations World Tourism Organization was officially opened on Sunday by Zimbabwe's head of state, Robert Mugabe. The veteran politician bemoaned the fact that Africa still lags behind the rest of the planet in tourism revenue, yet the continent is home to a number of renowned attractions. The UN WTO meeting is being used to come up with strategies for Africa to increase its share of global tourism. Among the stumbling blocks are cross-border travel restrictions and limited communications and transport infrastructure. The UNWTO General Assembly is being co-hosted by Zimbabwe and Zambia, both of which share the iconic Victoria Falls, which is the backdrop of the meeting.
The current situation where Africa only has a 4% share of global tourism revenue, in spite of its massive natural and cultural tourism resources, is a matter of great concern to us.
I would like to emphasize to you that well-designed and managed tourism can make a significant contribution to sustainable development, create decent jobs, and generate trade opportunities for our countries.
In the meantime, Zimbabwe's head of state has threatened to escalate his dispute with Western countries into what has been described as tit-for-tat retaliation against British and American companies on Sunday. But that is conditional on if Western nations do persist with sanctions and what he has described as harassment, quote-unquote. Mugabe and prominent members of his ZANU-PF party, which won 2/3 majority in the July 31st election, are the targets of financial and travel sanctions imposed by the United States and the European Union, both of which cite vote rigging and abuse of power. And Mugabe argues that while many companies owned by Britons and Americans are allowed to operate in Zimbabwe without undue government controls, the two countries have not reciprocated that policy move. The EU has eased most sanctions against Zimbabwe in March after the country's voters approved a new constitution, but they kept Mugabe and 9 of his closest associates still on the list. The UK said last week Mugabe's re-election could not be deemed credible without an independent investigation into the allegations of voting irregularities. American officials also said the poll was flawed, and Washington has absolutely no plans to loosen sanctions there until there are signs of change in the country. At 89 years of age, Mugabe is Africa's oldest leader. He has rejected fraud allegations and was sworn in last week for a new 5-year term in office. Standing by with some reactions in London is CCTV's Natalie Ferry. She joins us now live on the line. Natalie, of course, this isn't really the first time that Robert Mugabe has made threats against Western countries. But in your end of the world, are these threats being taken seriously, or is this just being seen as more political rhetoric?
Well, largely being seen as more political rhetoric, really. I mean, the stance of Western governments is very clear. As you mentioned, the UK has said they want an independent investigation into the elections. The US says that they have concerns about the elections, as does the European Union. So the fact that they have had such a hardline stance means that no doubt they expected Robert Mugabe to make comments perhaps of this sort. The European Union has, as you said, loosened some of those sanctions, but the EU Foreign Policy Chief Catherine Ashton said that in light of the election, the relationship with Zimbabwe was being reviewed. So in fact, we could see further sanctions being imposed once this investigation takes place, if indeed it does happen.
Now, there are, of course, quite a few UK firms operating in Zimbabwe. You've got Barclays with a presence there, Standard Chartered as well, quite a few others as well. Have they reacted to Mugabe's latest statement in any way?
Well, of course, companies like Barclays and Standard Chartered are already the target of Robert Mugabe's indigenization policy, where the plans are to take a majority stake in some of these foreign companies and distribute this among Zimbabweans. But a few months ago, Barclays said that they would no longer be releasing public statements in response to this policy. They would indeed, though, be engaging stakeholders until the situation is resolved. So no public comments expected from banks like Barclays for now, but no doubt behind the scenes they will be working to ensure that this doesn't escalate and that this does not bring them one step closer to the indigenization policy being applied to them.
Indeed. We'll have to leave it there for the time being. Thank you very much for that update. That's CCTV's Natalie Fury live in London with the latest reactions to the comments from Zimbabwe's head of state, Robert Gabriel Mugabe. Now, speaking of banks, Ethiopia's economy has undergone quite the dramatic transformation in the last decade. Its banking sector, however, does remain closed to foreign investors. Experts are now calling, however, for that sector to be opened up if the country is to sustain and improve its economic performance, as CCTV's Girum Chala now explains.
The Horn of Africa nation, with its strongly state-led economy, it has one of the world's fastest-growing economies. With not one single bank failure in the country's history, its financial sector of 20 commercial banks has enjoyed stability and is ripe for investment.
The Ethiopian banking industry is not that much linked to the global financial institution as of now, or financial industry. Therefore, we have untapped market. Even by now, we have a good opportunity in the banking sector to expand and to grow.
The sector, however, remains closed to foreign investors. The state, keen to protect local banks, has resisted calls to invite international banks into the country.
Actually, it's not time for opening our door for other banks, because, as we know, our country is in the transformational process, and banks are trying to be, competitive in the international market.
The last decade has seen major modernization, with operators such as the state-owned Commercial Bank of Ethiopia expanding rapidly to over 700 branches. While much of the market remains untapped, existing customers are calling for better services.
We will also be happy if we can process transactions without waiting on queues, or if we can use credit cards when we go to supermarkets instead of carrying a lot of cash in our bags.
But with calls for greater liberalization from the World Bank and other experts, locals worry that the entry of foreign banks may not be far off.
We are at infant stage as of now. If you introduce that giant with an experience of more than 200 years, that would be devastating for the indigenous Ethiopian banking institutions.
The government has tentatively unlocked some sectors, encouraging foreign investors such as South Africa's Standard Bank to set up a representative office. For now, it seems Ethiopian banks will remain in the hands of locals. But for the boom to continue, Ethiopia will need a strong and modern banking sector. Foreign investors are pouring in, hoping that the government will have a change of heart and let them in. Grumjala, CCTV, Addis Ababa, Ethiopia.
And that certainly has been a touchy issue at WTO negotiations. Now, let's make a quick run through the markets before we jump into the sports. Broadly red numbers right across the board, regardless of where you're looking at, except for South Africa. The All-Share Index in Nigeria ending the day lower by 0.14. The All-Share Index in South Africa, however, ending the day higher by well over 2/3. The 20-share index in Kenya capital Nairobi also in the red, down by about 0.31. And the Egyptian market also in the red on the day, down 0.44% on the day. That's business for you this Monday. Back to Beatrice now for the sport.